Welcome back to the Explainer. So, if you're looking to do business up in the North Star State, well, getting your sales tax registration right is absolutely step one to building a really solid compliant foundation.
Are you ready to start selling in Minnesota and collect sales tax legally? Let's simplify the process together. Okay, let's dive into it. Here's our quick roadmap for today. We'll cover 1. Why you actually need a permit, 2. Gathering your required documents, 3. A step-by-step application guide, 4. Avoiding common application pitfalls, 5. Maintaining ongoing tax compliance, and 6. Final tips and a quick disclaimer. All right, moving right along to Section 1, why you need a permit. Securing this permit isn't just about checking a random box for the government. It's actually a crucial protective shield for both your business operations and your personal finances. A sales tax permit is a standard item on the official Minnesota Business Compliance Checklist, sitting right alongside standard stuff like getting your federal EIN and setting up workers' comp. It is just a totally normal part of opening your doors.
So, what does this all mean? Well, the whole requirement to register boils down to a legal concept called nexus. And that basically just means you have a significant connection to the state of Minnesota. This actually comes in two forms. First, there's physical nexus. Imagine you open a local boutique in Minneapolis, or maybe you hire remote employees in the state, or even use a third-party warehouse, like an Amazon FBA center in Minnesota. That's physical. Second, we have economic nexus. Now, this applies to remote, out-of-state e-commerce sellers based entirely on their sales volume into the state, literally even if they have never once set foot in it. And for you out-of-state remote sellers, these right here are the magic numbers. If your remote business crosses $100,000 in gross sales, or if you complete 200 separate retail transactions to Minnesota addresses within a 12-month period, boom, you've established economic nexus. Once you hit either of those thresholds, the clock immediately starts ticking. You have exactly 60 days to register for your permit and start collecting that tax. So the crucial point is this: failing to recognize your nexus and get registered has some pretty serious financial consequences. Operating without that permit exposes you to strict penalties. We're talking a 5% penalty for late payments, accruing interest from the original due date, heightened audit exposure, and honestly, this is the scary one, potentially being held personally liable for the taxes you didn't collect from your customers. Trust me, compliance here is your ultimate financial safeguard.
Okay, Section 2, gathering your required documents. Let's get prepped. Think of this step just like prepping your ingredients before cooking a big meal, right? If you have everything laid out, the actual application is an absolute breeze. You're going to need your federal employer identification number, or just your SSN if you're a sole proprietor. You'll also need your exact legal business name, your physical address, and your NAICS industry code. Also, make sure to have personal details on hand, stuff like social security numbers and home addresses for the responsible parties, like owners or officers. They'll also ask for your projected monthly sales, which actually dictates how often you have to file. And lastly, just have your bank routing and account numbers ready so you can set up future payments. Moving on to Section 3, Step-by-Step Application Guide.
Let's move to the actual process and see how this all builds together. You've got your documents prepped, so now let's execute the application using the Minnesota e-Services online portal, mainly because it's by far the fastest and most efficient route. Step 1, just visit the portal and create your account. Step 2, from your fresh dashboard, select Register for a tax type and pick Sales and Use Tax. Step 3, input all those business details and sales projections we literally just gathered. And Step 4, review and submit. Now, a super common question we get from startups here is, well, how long does this take? Because it's processed electronically, you will receive your 7-digit Minnesota tax ID, which actually serves as your official permit, instantly. Pretty awesome, right?
Another really frequent question is, okay, but what are the costs involved? Well, here is some fantastic news for your budget. The cost to apply for a Minnesota sales tax permit is exactly $0. Yeah, unlike some other states that hit you with setup or renewal fees, Minnesota issues this permit completely free of charge. No way around it, that's just a win. All right, Section 4, avoiding common application pitfalls.
I want to slow down just a little bit here because this is where a lot of well-meaning business owners trip up and end up delaying their own approval. A really common pitfall is mixing up your legal business name with your DBA, your doing business as name. Listen, when you apply, you absolutely must use the exact legal name you filed with the IRS. For example, if your LLC is legally registered as Smith Holdings, but your cute little storefront is called The Daily Grind Coffee, you have to use Smith Holdings on the application. Don't just put down your brand name or your application will for sure get flagged.
A few other sneaky pitfalls include things like picking the wrong NAICS industry code or just guessing way too low on your projected monthly sales. But a massive one, especially for e-commerce ventures, is misunderstanding marketplace facilitator coverage. Let's say you're an out-of-state seller and you think, oh, Etsy or Amazon handles all my taxes. Well, they do handle taxes for sales on their specific platforms, but those sales still count towards your $100,000 economic nexus threshold. If you also have direct sales on your own website, you still have to register to collect tax on those direct sales once your combined total crosses that threshold. Oh, and don't miss temporary physical presence triggers either. Yeah, even selling at a weekend craft fair in St. Paul means you need to register.
Let's jump into Section 5, Maintaining Ongoing Tax Compliance.
Getting your permit is a totally awesome milestone, but it's really just the beginning of your compliance journey. Now, what's really interesting about this data is how your sales volume directly dictates your paperwork. The state actually assigns you a filing frequency based on your estimated tax liability. If you're collecting more than $500 a month in tax, you're filing monthly, due on the 20th of the following month. If you collect between $100 and $500, you file quarterly. And if you're collecting less than $100 a month, you only have to file annually, which is due February 5th of the following year.
Okay, I need to heavily emphasize this next rule, the zero return mandate. Yes, once you are registered, you must file a tax return for every single assigned period, even if you made absolutely $0 in taxable sales that month or quarter. Failing to tell the state that you made literally nothing is actually a huge reason why businesses get hit with automated assessments, late penalties, and those scary warning letters. Just always file, even if it's a big goose egg. Also, just a quick heads up on some recent compliance changes. Minnesota recently introduced a 50-cent retail delivery fee on certain transactions delivered in-state that equal or exceed $100 before tax. There is a nice silver lining for small businesses, though. If your total Minnesota retail sales in the previous calendar year were less than $1 million, you are entirely exempt from having to collect this fee. But as your business grows, this is absolutely a compliance metric you'll need to keep an eye on.
And finally, Section 6, Final Tips and Disclaimer.
To keep your operations running smoothly and really prevent any of those unexpected audits, you'll want to implement some strategic controls. First up, run automated monthly lookbacks on your gross sales. This tracks that economic nexus threshold and basically gives you a 60-day warning before you cross it. Second, constantly check your point of sale systems to make sure they map destination-based tax rates correctly. Minnesota's base rate is 6.875%, but those local taxes really add up. For instance, St. Paul's combined rate hits 9.875%. Finally, preserve all your invoices, logs, and exemption certificates for at least 4 years. Under Minnesota law, all sales are presumed taxable until you prove otherwise, so having pristine records is literally your best defense and your ultimate peace of mind.
As we wrap up this explainer, I do have to provide a quick but really critical disclaimer. Tax laws shift. They are constantly evolving. Always verify current regulations directly with the Minnesota Department of Revenue, or just consult a qualified tax professional to ensure you're operating with the most up-to-date information for your specific business structure. Well, we have covered a whole lot of ground today, from identifying your nexus to navigating the e-services portal, all the way to maintaining that ongoing compliance. So now that you have the roadmap clearly laid out in front of you, what steps will you take today to secure your business's financial health? Don't let tax compliance intimidate you. Just take that first step, get registered, and keep building your amazing business. Thanks so much for joining me on this explainer, and hey, happy selling!